continuously monitoring the situation.
Welcome back, viewers. Let's take a look at the big story that we are tracking at this point of time. The RBI, Reserve Bank of India, has lowered the repo rates by 25 basic points, inflation estimate by 30 basis points and the cash reserve ratio by 100 basis points at its Monetary Policy Committee meeting today. The CRR cut alone is estimated to release 2.5 lakh crores into the financial system. This is way more than the market had estimated and the cheer was palpable. Nifty Bank spiked more than 500 points from the day's low. Immediately after Governor Sanjay Malhotra made the announcement, let's now listen into that.
The Monetary Policy Committee met on the 4th, 5th and 6th of June, that is today, to deliberate and decide on the policy repo rate. And after a detailed assessment of the evolving macroeconomic and financial developments and the economic outlook ahead, the MPC decided to reduce, which is widely expected, the policy repo rate under the liquidity adjustment facility by 50 basis points to 5.5%. I repeat, the reduction recommended by the MPC is for 50 basis points to 5.5%. This is with immediate effect. Consequently, the standing deposit facility rate, which is the STF rate, shall stand adjusted to 5.25%. And the marginal standing facility MSF rate and the bank rate shall stand adjusted to 5.75%. I shall now briefly set out the rationale for these decisions. Inflation has softened significantly over the last 6 months from above the tolerance band in October 2024 to well below the target. Latest numbers are 3.2% with signs of a broad-based moderation. The near-term and the medium-term outlook now gives us confidence of not only a durable alignment of headline inflation with the target of 4%. You are aware we had earlier projected for this year an average inflation of 4% as excluded in the last meeting, but also the belief that during the year it is now likely to undershoot the target at the margin. While food inflation outlook remains soft, core inflation is also expected to remain benign with easing of international commodity prices in line with the anticipated global growth slowdown. The inflation outlook, therefore, for the year is now being revised downwards from our earlier forecast of 4% to 3.7%. Growth, on the other hand, remains lower than our aspirations amidst challenging global environment and heightened uncertainty. Thus, the MPC felt that it is imperative to continue to stimulate domestic private consumption and investment through the policy levers to step up the growth momentum.
Well, all right, Akash Jindal, the economist and the expert of the markets, joins me live on the broadcast. Thank you very much, Mr. Jindal, for joining us live on the broadcast. Now, the RBI Governor Sanjay Malhotra led Monetary Policy Committee has made this larger than expected surprise announcement, and experts had earlier widely expected that the RBI is going to cut the MPC and the repo rate by 25 basis points from in fact 6 to 5.75, which has now been seen as cut to 5.5, which is going to bring a big cheer to loan borrowers as EMIs are likely to come down substantially with a cumulative 100 basis points repo rate cut since February this year. The MPC has also decided to change the stance from accommodative to neutral, while RBI maintained and announced that a staggered 100 basis point cut in cash reserve ratio CRR to 3% as well. How do you view this major announcement and in fact big relief to the loan borrowers?
It is a huge relief to the loan borrowers, because 50 basis point cut is something which is much more than expected. See, now what would happen is people who have already borrowed on floating rate of interest, housing loan borrowers, they'll have a huge relief as their EMIs are going to fall substantially. Similarly, people who want to buy new houses, new scooters, new cars, there would be a huge relief because they'll become economical, cheaper for them. Because see, these days, more than 95% buying of all these things is done on loans, on EMIs. So EMIs would reduce. So firstly, it's a huge relief for people who have already borrowed on floating rate of interest. Secondly, it would be a huge relief for people who want to buy new houses, new flats, new cars, two-wheelers. And for the economy, it's going to be a huge demand booster. It would increase consumption to very high levels. See, we shouldn't forget, my organization, akashindal.in, believes that these are days of global slowdown. In these days of global slowdown, we need to boost our consumption because in these days of global slowdown, it's our consumption which is keeping our economy moving. I'll give you data from January to March of 2025. See, our economy has grown at 7.4%, which is the fastest growth amongst major economies. If you compare us with other economies, economy like Japan, January to March 2025, they have reduced by 0.2%. Economy like Germany, from October to December 2024, they've reduced by minus 0.2%. Whereas India is growing at a robust speed. So I think our demand, our consumption is a major booster for our economy. So I think it's a very nice decision. This would give our demand, our consumption a huge boost. I'll tell you, see, our GST number, you see, April 2025, GST collection has been 2.37 lakh crores. May, again, we have made a record in GST, 2.01 lakh crores. Now, the major reason is our consumption, our demand. So I think in these days of global slowdown, this was something which was very, very much required. Now, inflation is expected to be around 3.7%. GDP growth is expected to be 6.5%. Inflation, if it stays at 3.7%, it's a huge relief because RBI itself has given a band of 4% plus minus 2%. RBI has always liked the inflation to stay as close to 4%. Now, with inflation being much, much lesser than 4%, it's a huge relief for the country, for the common man, as well as for RBI Monetary Policy Committee. It was a good platform. It was a good situation where they could have reduced the rate and they have taken a very nice decision. Now what would happen is with demand getting boosted, with consumption getting boosted.
Well, Mr. Jindal, many are also lauding this to be a very bold and timely step. Beyond the real estate, the rate cut is also likely to unlock the demand across the consumption-driven sectors, including reviving the private investment and also reinforcing India's economic momentum through the next year of financial 2026, where a promising monsoon outlook further is also going to strengthen the trajectory, and boosting the rural incomes is what is going to take the center stage, easing the inflationary pressures and supporting the consumption across semi-urban and the rural regions. Your take on that? In fact, as the MCC meeting has brought a very fortunate and a bright news for, in fact, all the consumers and the loan borrowers in the coming months for the big investments that could be made.
I'll answer all your questions point by point. Firstly, you have said it's a bold step. I think we have the platform. We have the fundamentals for taking such a bold decision. Inflation for March of 2025 has been 3.34%, much, much lesser than the RBI comfort level. Then April 2025, the CPI inflation has been merely 3.16%. So we have a basis, we have a platform, our fundamentals. They were in a position that we could have taken a bold decision. Now, how this bold decision is going to impact us, as you have rightly said, housing demand, I have already told you, housing demand is going to get boosted. Plus, the people who have already taken housing loan on floating rate of interest basis, they are also going to have a huge relief. And consumption across sectors. See, these days, everything is bought on loan, everything is bought on EMIs. Even holidays, people are going on EMIs. So demand for scooters, two-wheelers, motorcycles, car is going to get boosted. For electrical appliances, mobile phones, LED sets, every area demand is going to be boosted. When demand gets boosted, the first beneficiary is employment. This would be a huge employment booster, that this would be a huge tax collection booster. I already gave you data for GST collection, income tax collection, already it's high. 16th March 2025, we had a 16% jump in income tax collection. So our demand is going to get boosted, which is going to result in higher tax collection. Now, what does higher tax collection denote? Higher tax collection means that our government would have much more money for infrastructure. Government would have much more money, like this Chenab River project, bridge, and more roads, more railways, more airports, and for social schemes like more schools, more socially relevant things like more schools, more colleges, more hospitals. Plus, what would happen is employment would definitely increase. And now what would happen is global money also would come to India, because we are amidst a global slowdown. I just gave you the data for Japan. January to March 2025, they had negative GDP growth, minus 0.2%. October to December 2024, Germany had a negative GDP growth of minus 0.2%. UK, for September, October 2024, they had minus 0.1%. See, amidst this negative GDP growth, India is one shining star. So what it means is that global money, much more global money would come to India. So that's going to be, again, a feather in India's cap, because FDI, we have been performing very well. Now you're talking about monsoons. Yes, monsoons are going to boost rural demand, because monsoons are very relevant for Indian economy. That's why I'm saying for Indian economy, things are looking very rosy.
All
January
right.
to March also.
Mr. Jindal, thank
we
you
have
very
shown
much for being with us on the broadcast and in fact sharing your detailed take and also what your perspective for the context of this latest breakthrough that has come from the RBI and the